85% of the capital never made it to the company. So when the company comes a month and a half later and restructures, people take it as, okay, this is a collapse that happened in 1.5 months.
I think a lot of people, unfortunately, think about relationships from the beginning as to what can I get out of that person.
Personal relationships are the core of everything, and relationships are more valuable than anything, right? Money, career, opportunities, risk, all of that comes after human beings.
Talking about investments, the idea of crowdfunding.
And then it goes beyond capital, because when these people invest, they don't only invest capital. They know clients, they know channel partners, they know talent, they know regulators.
Yeah.
That proliferation of capital is what we need. That democratization, that ability for us to, whatever good idea is, you support it with capital in whatever structure you want.
You've worked in advisory, you've worked as a CFO, worked as an operator in a startup. Where do you think are the biggest opportunities in the next 5 years? As I said in the intro, I think there are 3 main elements or topics that I want to discuss with you today. One is relationships and the emphasis on relationships, specifically putting it into context here in the Middle East, where I think people prefer those who don't think from a transactional basis, but more of trust and genuine connection. The other thing is what happened to Swvl. And the reason why I say this is because I think there's a lot of Arabic content that covered the situation and explained what really happened. But the English content typically has a more negative sentiment, which is understandable given that much of the context is regional and was covered in Arabic initially. And then the last thing is crowdfunding as a alternative source, but also an upcoming source of funding. So your career has taken you from 10 years in investment banking to now leading as the chief financial officer of one of the largest oil and drilling companies in the world. But I want to start with a piece of advice that your father gave you, which I read in your enterprise interview. And it's when he told you, don't be transactional. So I just wanted to understand what's the story behind that.
I think his point, I was asking him a lot what he would work every single day, right, through the week. So he would work 7 days. He's a professor at the university. So he would be teaching like multiple universities. Even the weekends he would go and teach. And my question was, why do you need to like do that? And is that like one day on the weekend from like a financial perspective really worth that additional day versus just taking a day off and being with us, right? And his response was, it's not about the amount of income you generate in that 7th day. It's about the people that you meet on that day and the additional opportunities that can open and the additional doors that can unlock. And you cannot form a definitive view that 6 days are enough in terms of unlocking the door, because that 7th door may be the one that actually something comes from behind. Mm-hmm. So for me, the lesson was, you keep knocking on like every single door, keep trying everything, say no to nothing, say yes to everything, pursue every opportunity, because it's extremely difficult to know which one will unlock. So you've got to do it all, and then in totality, it works.
So on that basis, do you find it hard to say no to something?
I don't say no, generally. Like, it's very, very difficult.
Okay.
Like, I think it's a very, very high bar for me to say no. Like, I think everything can be tweaked into a yes with certain caveats, a yes but, a yes in a way.
Yeah.
But an outright no, I like to believe I kind of rarely say an outright no, if ever.
That's very interesting, because I think investment banking in general is a field where, or finance is a field where numbers make the decision, right? And a lot of things are in nature transactional. Yeah. So I'm very curious how you applied this non-transactional philosophy into your work.
Look, again, for me, I believe like everything can work. You just need to compromise, find the middle ground, meet in the middle, do something about it. Like, I don't see how you can be in a situation where just nothing works. Like, there must be a way to make it work, because at the end of the day, it's always better to find solution space, always better to find an intersection. The person in front of you wants to do something. So there's always a way to meet them halfway. And actually, investment banking for me is core to that, because the whole job of an investment banker is what? Is to actually make a transaction happen, right? Is to bring together a buyer and a seller, a company that wants to go public and an investor, a company that needs to do a restructuring with banks, and structure that solution space, right? In terms of process, documentation, valuation, you're constantly trying to find what is that middle ground, what is that outcome that no one is perfectly happy about, but everyone is just willing to, you know what, let's just do it.
Yeah.
That is exactly the sweet spot you want to be in.
Love that. So I also, after reading through a lot, I realized that you've said that relationships have been a core element in how you were able to progress quickly and move, making those transitions between the different companies that you've worked in. So my question here is, how do you approach these relationships from the beginning?
So you're absolutely right. It has been the driver for me. So like my career has been, I intern in one place, I go back with a full-time offer in the same place. Then I move from that alongside a colleague who I worked with to another place. Then I moved to 3 of my clients back to back from the advisory work. So it's all been moves in the inside. That's been relationship driven. I've been fortunate enough that all of these moves have been so, and this is how you get a lot of trust and platform.
Yep.
That is more than just cold interviews. For me, how you approach the relationship is a few things. One is this relationship is an integrated relationship. It's social, it's professional, it's personal. It cannot be one or the other. It cannot be just a cold professional relationship. It cannot just be a pure like social relationship that you don't tap into to try to create more value for you and the person. So you look at the relationship holistic, right? I'm here today. I'm going to do this podcast with you. We're going to do something with the university together. We're going to do other things in the future, right?
Yeah.
That's a holistic relationship where we're constantly adding value to each other. We're also going to hang out tomorrow, right? So we're going to do everything socially and professionally to add value and have fun in a holistic way.
Okay.
Second is the relationship is continuing, right? So it kind of never ends, right? So for me, for example, when I transitioned from QInvest to Moelis, kept the relationship with QInvest, they end up at the end being one of the investors in Swvl. When
nice.
I transitioned from Moelis to Swvl, I stayed for 2 years as a part-time advisor with Moelis. When I transitioned from Swvl, I still stay on the board until today. When I transitioned from AIQ to ADNOC Drilling, I supported for 6 months on the transaction with Preside after I left. And I intend to continue to always do the same. So every relationship carries in every way possible with you, and you keep that relationship.
This is also like, I love that point, by the way. And I think we can even put a bit more emphasis on, if it's progressional, as in over time, you're going to grow your network even more and you have more relationships that you need to maintain. It becomes a matter of how do I distribute my energy? Yeah. Given that I have a role at a company that is very demanding, but I also have all these relationships that I need to seed every once in a while. So how do you personally manage that?
I think a couple of things. One is these relationships from a pure energy perspective are energy additive, right? Because we're going to sit today, we're going to have this podcast, etc. I'm going to go out of here even more energized, right? Because of the conversation. So for me, it is how you actually get energy from other people. So it should not be perceived as, okay, I'm contributing energy or I'm draining. It's the other way around. It's the energy of the people that you work with that reinforce your energy, especially staying around positive people, right? That's the key thing. Is you always want to be around positive people, people who are working, doing things, trying new things, entrepreneurial, have ideas. So that effectively all feeds your energy. Second thing is the bigger your network and engagements are, the much more efficient and resourceful you become. So everything takes way less time, right? Because if I now know you, I know that, okay, when next time I want to do something with a university, I want to do something with PwC, I want to do something with this or that, I'll come to you. So this time I've actually cut significantly the time I need to do things. So actually you have actually much more time, the more people you know and engage with.
I love that perspective. This is beautiful. So, were there a time, or let me ask you this from a different perspective. Based on what do you determine the character or the type of person that you want to have in your network that you want to seed further? Is it material as in what their position, what they do, what they have access to? Or is it more on a personality level?
Personality. So one is the positivity. At the end of the day, like we discussed, the key thing about any engagement you have is you want to have a positive person that seeds positive energy to you and reinforces this. So the key thing you try to stay away from is anyone who is negative, who's pessimistic, who's cynical, because they drain their energy and yours, right? So that's the most important thing. Second is you want someone who hustles, because the person who hustles is going to open a lot of opportunities for you, for them. Their engagement, they'll keep moving. Every time they move, they'll create new opportunities, new ideas for you. Everyone starts from something. So it doesn't matter what your current position is, because it's a relationship that will stay 30, 40, 50 years. So completely doesn't matter where you are now. But if you are hustling and positive, then you will reach and you will open for me with you.
Very nice. And in terms of, you said, we talked about seeding those relationships. What are the type of things that you personally like to engage in?
Yeah.
And, I'm aware of them, but maybe you can tell the audience about them, about seeding those relationships every once in a while.
I like to engage with founders, definitely people who are starting new businesses, whether that's supporting advice, being on the board, being on the advisory board, just ad hoc being there, supporting on finance, on strategy, on fundraising, on engagement with stakeholders in general. Love working with investors, whether these are VCs, private equity, accelerators, incubators, in terms of feeding into them startups, adding value to their portfolio companies, helping their companies expand across the board, like I do with Hub 71 as an entrepreneur in residence, etc. I love working with obviously we had our angel syndicate, Cora 71, which we now merged with Stride into Stride 71.
Yep.
So I love angel syndicates because effectively that again channels capital from a new source of capital into companies. I love engaging with corporates as well, like because ultimately they have the firepower and the muscle to be able to create, kind of put resources to work in a massive way. A governmental level is very critical because again this is the policy decision making, right? So ultimately, if you want to make real change, it has to be both. It has to be bottom up, grassroots, that you're basically working with youth and companies and individual entrepreneurs to create these movements. But at the same time, you need to work top down in terms of making sure that the policies and the resources are being made available to support this initiative. And it's this that kind of creates the flywheel between the two.
Okay, I see. So the one thing I'm noticing in all of those interactions is that you try to lead with a value first perspective,
Yes.
which is how can I help you?
Yes.
Right?
100%.
Here's my hand, how can I help you? Which is also something that I found to be, something I relate to because I'll just be honest. Before, as anyone would do, I would reach out to people on LinkedIn like, hey, how are you? I'd just like to connect with you. And the reality is that these people could be amazing individuals, but if I'm not offering value and I'm asking for their time, then it becomes tough. But once you had some layer of value that you can provide to them, it becomes a lot easier to talk to them.
I think you have to increase the value of the pie before you get into splitting it and how you transact on it, right? So you have to demonstrate in every relationship, every interaction, that with us together, we'll create more value. Once people truly believe that there's more value, they're much more open to split it with you in whatever way it works and is fair. But trying to split before creating is really difficult.
Yeah. And what's your perspective on people? Because I think a lot of people, unfortunately, think about relationships from the beginning as to what can I get out of that person, and not necessarily think the 20, 30, 40 year on that basis. So what's your opinion on that?
I think there's a few misconceptions that people have, right? One is people worry that, okay, what happens if I engage with someone and I don't end up being compensated fairly? At the end of the day, you will always be compensated fairly, because if not by that person, you will be compensated fairly in another thing. Because whatever faith you believe in, all our faiths have the same cornerstone ideas, that we get compensated in totality based on all our efforts and contributions. So if you don't get it from that person here, it doesn't mean that your right has been taken away or you're being treated unfairly. Just whatever your faith is, you'll be effectively receiving that in another way. So you don't need to over worry about it. Second is, the vast majority of people are genuinely good people, right? And someone is not necessarily not offering you something up front because they want to take away your right. It's because also they don't know yet how much value you're being able to add. But when you come in and add value and demonstrate that, you will ultimately be able to benefit from that. Third is, there's a massive value of momentum, just starting and doing things. When you kill things early on by stalling, by over negotiating, by discussing, killing that momentum, you don't. If I today spend you and me like a month trying to come up with details and do this and let's split that, don't think that once we've done that we're going to be back into the normal. No, we've lost momentum. We've created that friction. It's become more difficult. We have a slower start. Whereas if you and I meet today and we start working immediately and then we'll worry about the details later, that momentum will carry us for a very long time.
Okay, I see. And going back to that point, could that potentially be a reason why you're so pro helping those very, very early startups as being their advisor?
Absolutely, because again, I believe ultimately whatever support anyone provides, they will be fully rewarded for in every way possible. And that's my faith, whether it's my religious faith, whether it's my humanity faith, right? So that's why for me, it's not, and I don't see it as help or support. I don't see it as a gift or something that you're doing. It's a duty, right? Because one, you've been helped, you've been supported to come to where you are.
Yeah.
Second is you've been gifted certain things in terms of skills and talents that it's your duty to contribute.
Yeah.
Third is you will have a positive wider impact on society, right? And then fourth is you will personally be rewarded over time in this something else. So all of these four things for me create beyond and kind of a willingness to help. I think it's a duty to help and support.
I see. Okay. And then talking about like the transition from 10 years in investment banking or almost 10 years to Swvl, you said also it was relationship driven. So I'm curious, what drove you to take a decision from a field that many people spend years to try to break into a riskier move with Swvl? I'm assuming it's going to be something with Mustafa and you, so I'd love to hear about
so
that.
it's three things. That's the first one of them, and the most important is Mustafa. I've been working with Mustafa for 2 years before I joined as CFO, when I was advising Swvl on fundraising out of Moelis, the investment bank I was with. So obviously he's become a brother. We've really had an incredible relationship. So for me, the opportunity to just work with him and partner with him deeper far kind of trumps any risk or numbers. Because again, personal relationships are the core of everything, and relationships are more valuable than anything, right? Money, career, opportunities, risk, all of that comes after human beings and personal relationships and partnerships.
Okay.
So that's definitely the first reason. The second reason is personal growth. At the end of the day, as you said, it was at that point in time 9 years in banking, including 5 years at Moelis. And at some point, no matter, and Moelis is one of the most incredible places I've been, and until today, this is like by far, Moelis and Q Invest, I've been fortunate to work with two investment banks I really believe are the absolute best out there, and I'm incredibly still tied into them until today. But ultimately, with time, no matter what you do, your learning curve has to slow down, even if you're in the most incredible place in the world. And the way to re-steepen that learning curve and can recreate that personal growth is to just do something new, move on, try something new. And obviously, when they also offered the ability for me to continue with them on a part-time advisory basis, that obviously became the best of all worlds.
Yeah.
But ultimately, I do believe in that need to kind of keep challenging yourself and moving and re-steepening your learning curve every time it starts to slow down a little bit.
Okay. So your time at Swvl was very interesting because it was at the time when a very, very big shift happened, which was Swvl's strategy to IPO. And the reason why I want to talk about the IPO and that event is, as I said in the beginning, it is, I think, very, very misunderstood in the public eye. So let's break it down from the beginning. What was the rationale behind an IPO at that time?
So I'll explain. And again, I think when I explain, I don't want this to be taken as we are trying to be defensive or justify a decision, right? Like, we're always more than happy to take responsibility and accountability for decision, right? But we provide the context more as a learning. But if someone doesn't feel that this is a good enough reason, that's okay, right? We're not trying to say that to justify. So what happened is we were during COVID, and obviously the buses were suspended because you can't have mass transit during COVID. So as a result of this, the company was effectively at de minimis revenues.
Okay.
So raising in the normal private market in the normal way was not an option.
Okay.
But at the same time, you had the SPACs, the special purpose acquisition companies, which are basically the vehicles which were going public. And these vehicles were much more focused on look forward plans, right? So other companies were like vertical takeoff, space tourism, batteries, electric trucks, hydrogen, so much more futuristic place. So that allowed us to really focus on what's the business plan, what's the mission, what's the opportunity. Today, people spend $1 trillion every year on buying mass transit tickets, buses, trains, etc. So obviously that massive market size is extremely attractive for people and the ability to execute.
Yeah.
So that's why the SPAC, or going public via SPAC, was a specific vehicle to be able to fundraise and build the company on the base of a look forward, as opposed to a more traditional, what's your current kind of run rate, revenue. So that was the opportunity that was available at that point in time.
After a very, very healthy growth cycle the year before, I think you 10x revenue the year before.
The year before COVID?
Yeah.
Exactly. So before COVID, the company was obviously one of the fastest kind of growing companies.
Yeah.
Unit economics were improving quite significally. We've done what was at the time the biggest Series A and then Series B in Egypt. We had flagship investors, Beko, Vostok New Ventures, etc. So it was obviously great mission. You're getting everyone to work to school safely, reliably, and affordably, regardless of their income level. You're enabling everyone a fair chance at education and work. We called it the right to mobility, the right to fair, equitable mobility.
And
But
it was built with a global first mindset as well.
Yes, it was always built that effectively today in emerging markets and frontier markets, we don't have the same luxury that developed markets have in terms of having a consistent, reliable public transportation, because governments are much more constrained from a funding perspective. And hence there's an opportunity using technology to create almost a virtual bus network where effectively you're aggregating private buses and minibuses. You're effectively putting them on a virtual bus routes and bus stops.
Yep.
And by bringing together thousands of individual buses, you are recreating what otherwise a public bus network in a developed market would look like.
From the outside, people may draw a comparison with what happened to Anghami. So from the perspective of somebody that has seen it from the inside, what do you think are the core differences between that situation that happened with Swvl and the situation that happened with Anghami? And I say this because some people may question the decision from the beginning. Like, you saw what happened to Anghami, why did you decide to do this?
Yeah. So I think first of all, it's important to kind of differentiate between the timing of the decision and the timing of the picture of going public and ringing the bell on the exchange, right?
Yeah.
So for example, in the case of Swvl, that decision was made in May 2021.
Yeah.
Obviously, in what was at the time a very healthy environment.
Yeah.
The decision by Anghami was probably made around the same time. I think it was slightly before.
Okay.
Again, in a very healthy environment. And then there is the timing of when we actually ended up ringing the bell, both of us, which in our case was 31 March 2022, a few weeks after the Russian-Ukrainian war has erupted. And I think in the case of Anghami, that was probably a couple of weeks or a few weeks before. To your point, we have seen the redemptions level of Anghami and how high. Redemption is basically the amount of capital that investors don't end up contributing at the end. They end up calling back.
Yeah.
But at that point in time, that was like too late. And it wasn't like Anghami was the first time that happened. The entire market was like this. So that wasn't really the decision point. The decision by then was kind of long gone and things were in motion. And obviously backing out at that point in time doesn't help, because if our problem that we're saying is that 85% of the capital never made it to the company, if we had pulled out, then just 100% of the capital would have never made it to the company. So that wouldn't have really solved the problem in any way.
Was there an expectation that there is a very high level of risk once you ring that bell?
Yes, so I think a few things happened. One is, in the run-up to the listing itself, we were already budgeting for 50% of the capital to be redeemed by investors. Okay. And that was significantly higher than what was the market norm at the time. So to give you perspective, Grab went public in December 2021. That was the last kind of major successful listing before our listing in March 22. And they had less than 1% redemption. So they actually ended up with more than 99% of the capital. So until end of 2021, the market was very healthy. What happened in the span of 3 months is the fastest increase in interest rates in 40 years, coupled with the war in Russia and Ukraine. And that obviously has completely kind of changed the landscape in terms of emerging markets, currencies, depreciation. So with that change, yes, obviously it became clearer with Anghami, with others, that these redemptions are coming. And that's why a lot of people were like, how do you do a listing in March and then you do a restructuring in May? And it doesn't work. But the thing is, it wasn't like, okay, we got listed and then we got surprised and then very quickly. The listing was just what was going to happen at some point. It's a mechanical time, but it was already clear that even with the listing, we need to restructure. Now, I think the problem is when you look at it from the outside in, you see it a little bit binary. You see the listing as a euphoric moment, which can only be positive. So if the company is going public and ringing the bell, that means in people's mind, the company is doing extremely well.
Yeah.
So when the company comes a month and a half later and restructures, people take it as, okay, this is a collapse that happened in 1.5 months. In reality, when we were listing, all of these issues were known and the restructuring was underway. But you're not going to go like ring the bell and give a restructuring speech on NASDAQ, right? When you go on NASDAQ floor, Mustafa is going to make a speech. It's a once in a lifetime when you're rallying. You're the first Egyptian company to ever go on NASDAQ. You're the first Middle Eastern company above $1 billion. The first speech to be ever made on Arabic on the NASDAQ exchange. Yeah. Of course, you're not going to talk about restructuring, right?
Agreed.
So this is more of how do you kind of manage the journey. But in reality, that was always something in the works.
So as the public-facing CFO and the actual CFO of the company, you are the person that many people would look at during such a transaction, right? Because it's a monumental moment for the company, and it's also a monumental moment for you and your career. What was public perception after? Not on the company, but I'm more concerned on you, and how did you manage it?
Look, I think this is, to be honest, one of the areas where I think we've been very, very fortunate and surprisingly very, very fortunate, right? I think I'm actually very grateful for how people have reacted to this. Like, I think one of the things you mentioned is some of the negative coverage and connotations. And I think in my mind, it's really been very balanced and it's actually been relatively objective. Of course, when you don't have perfect information and you're from outside in, it's only fair that your information and your judgment will never be as if you're in. But that's fair. If today, you and me speak about anything else on this podcast today that we're not in, we're also outside our control. We're going to be slightly judgmental because we lack some context on something. This is just kind of, it's fair. But generally, people have been very, very positive and very, very supportive, right? Until today, all the major investors who have in Swvl are people who we either continue to work with, do other things with, continue to be very close to. Everyone who was in Swvl from a team perspective, we've kind of continued to engage in so many ways. So people have actually been very, very understanding, accommodating, and have a lot of empathy despite the fact that we have made tremendous mistakes, but people have really given us the benefit of the doubt that we have always tried to exercise our best judgment, which was lacking at many times and suboptimal at many times, but was always done with a good intention and good heart, which does not make it right, does not justify, but kind of people have that very positive and gracious view of the mistakes we've done.
You know, I'm very glad you say that because it feels like a full round moment because, as I said, or as we discussed earlier, the idea of non-transactional relationships.
Yeah.
When the relationship by itself is not built on, let's say, the transaction between a fund putting in money or funding Swvl, then those people will support you because the basis, the foundation of it is not just the transaction. So honestly, I think that's a great point. So let's talk more about what was happening inside the boardrooms at the time. Before the IPO, there was an expectation that many people were going to become millionaires out of this transaction. And there's a lot of positive, I would say, vibes in the Egyptian ecosystem. As you said, the first Egyptian company that's going to list on NASDAQ, and it was going to be valued at over $1 billion, right? So that was a significant moment. The conversations in the boardroom, let's talk about like before and after.
I think euphoria is probably a very good way to kind of describe it, because I think you obviously talk about the personal side, which is how much money individuals would make. There was also funds, right? Obviously were invested, and these funds were marking up on their books the net asset value of the company to reflect that $1 billion valuation. And obviously based on that, they were able to show certain IRRs and certain kind of returns and money on money. And a lot of them were also fundraising their own next funds, and these were being used as kind of case studies to fundraise. And it wasn't only about Swvl, right? At the time, generally the market was doing very well. So most of these companies were being marked up. So that kind of most of these VCs and funds were kind of showing incredible returns. And the ultimate LPs were also in a place where, okay, my kind of real estate, my venture investments have done very, very well, and kind of I'm marking up. So I think, yes, it's probably a euphoric moment. That's, I think, is representative of what 2021 was in general across the globe, right? It's like, even though on a personal level, people are kind of locked down and staying at home and not able to go out, but on a financial perspective, whether it's from the Biden checks to all-time high valuations, to public markets, to Robinhood, there's this kind of euphoria in general that everyone's just making kind of a lot of money.
And money was very cheap to get.
100%.
Yeah. So was there any particular conversation, meeting, phone call, or decision that you had to take that was particularly uncomfortable and you remember from that situation?
I think definitely the layoffs continues to be the way, because at the end of the day, investors are their professional investors, right? At the end of the day, I'm talking about more of the kind of the VCs and the fund side. They obviously have diversification strategies. So obviously, while ultimately you're a capital custodian for them and you do kind of every single effort to kind of make them whole and make a return for them, they have contingency planning for that. But obviously it's the employees who have the livelihood, and then some of the retail investors, right, who may not necessarily have the same level of diversification and kind of breadth of kind of investment strategies as kind of institutional funds have. So these are always the most difficult. When you speak to someone who has personally lost money, either lost money on a personal level as an employee or lost money as a personal individual investor. Again, I think people have been, to my incredible positive surprise, have been extremely supportive and understanding in a situation that otherwise could have been way, way, way worse, right? Because ultimately these are mistakes we've done that have impacted people massively. So yes, these by far continue to be, I think, the most of it. I think that's always the biggest regret.
And ending on a positive note, I wanted you to give us an update on what's happening with Swvl now.
It's been incredibly
You're
well.
still on their board,
yes,
right?
Yes. It's been thankfully incredibly well. I think obviously the Saudi B2B business of Swvl, of basically providing transportation solutions for government, corporates, hospitals, schools, universities, has taken off quite massively. Off the back of that, we've expanded that offering across the full GCC, so UAE, Qatar, Kuwait, etc. So that's all performing very well. We've had our first SaaS contract in the UK, where effectively we're kind of a purely technology provider. So I think what we've taken is so many of the learnings and what we've been through and repackage a lot of that into focusing on our core technology offering, trying to make sure we get ourselves entangled less in the operational challenges on the ground in so many countries, and actually turning all of these operational challenges, which today our operators, our customers face, into how do we use software to avoid all of these inefficiencies, mistakes, network problems that we have, and package it and give it to other operators and bus companies, and that's been working extremely well.
So as an infrastructure layer technology.
Exactly.
I see. Amazing. And then also the company now is approaching profitability or profitable?
It's profitable on both a cash and an accounting basis. So been self-funding. So it's been really incredible.
It's amazing. So talking about investments, let's now talk about the idea of crowdfunding. Yeah. So before we get into that, maybe you can give people an introduction about what Core 71 was and what's the thesis behind it. And then we'll go into what happened after.
So if you look today at, for example, you take the most successful capital market in the world, which is the US public equity capital market. Yeah. The reason it's so successful, it's so inclusive. Everyone in the world invests in US public equities, right? Yeah. From individuals in the US to institutions to individuals around the world, everyone can open an account online and can invest. Yeah. And that massive flow of capital, liquidity, inclusion is what really provides access to capital. And today, the US economy is the biggest and most successful economy in the world because it has, one of the biggest reasons is it has that most successful capital markets in the world. So if we want our countries to develop and reach that level from an economic perspective, we need to have these thriving capital markets. And in order to have them, we need inclusive capital markets where everyone can invest. We need to effectively move the majority of our investments from being most of them in assets which are not directly creating immediate employment by being stuck in different asset classes to moving more and more money into things which can immediately create businesses, which create employments, which creates growth in our countries. And hence we need to enable that. So the idea of Core 71 was to bring that individual capital into one of the areas which is most lacking of individual capital today. If you look today at technology startups, it is very difficult to raise from individuals. The majority of the money is being raised from kind of funds and VCs. Yeah. And even if you want to raise from angel investors, the minimum ticket size is very high. Most people cannot afford to write the big tickets which are required by angel investors. To put a $100K or a $50K into a single investment, for the vast majority of us, just doesn't make sense. It's either unaffordable, or even if it is tying too much concentration risk into one asset. Yeah. So how can we give people the opportunity to invest from $1,000, even in the future, maybe from less than that? Yeah. So that's where we started Core 71. It was basically, the idea is to allow people to invest from that very thing. What it does is it gives people much more alternative investments and way to make money in different ways and make a return on the money, and it gives companies an ability to tap into a much wider nature of investors. And then it goes beyond capital, because when these people invest, they don't only invest capital, they know clients, they know channel partners, they know talent, they know regulators. Yeah. So suddenly as a company, you have only one line on your cap table, which is Core 71, but behind that line, there's 150 people sitting in our angel syndicate who basically all of them are bringing the relationship. So now you have effectively 150 ambassadors for the company out there, super keen to spread the word and support you in every way possible.
I love that. And it was born out of Hub 71.
Exactly, as a partnership with Hub 71. So I've been entrepreneur in residence with the Hub for 3 years. The Hub is one of the most incredible places we have in the region in terms of today more than 2,000 companies apply every year to become part of the Hub because of really the value it's able to offer in terms of bringing startups to operate, penetrate the market, partner with the market. And Hub 71's vision again is a successful ecosystem is one that have every type of capital. And Hub 71, the key thing is they see themselves as an enabler for the community. So Hub 71 is not trying to always, okay, what's in it for me here, what's in it for me there. So for example, on that angel syndicate, they provide a 150,000 dirhams angel incentive package for the syndicate without taking any economics from the syndicate. But because they do believe that a successful part of that is part of a wider success.
I see. Okay. And then let's talk more about your decision to go ahead and merge with Stride.
Yes.
So I understand. So maybe you can even give
Yes.
a bit more context about what Stride is, and then
Yes.
what's the vision now.
Definitely. So Stride basically is an alternative investments platform that effectively invests in private equity, sports, etc. That is regulated by the DFSA, the Dubai Financial Services Authority, in a way that allows it to raise money from both individuals and institutional investors. When we effectively reduced the minimum ticket as Quora 71, we were able to raise $1,000 from the person, but because we are not regulated, we are licensed by, but we're not regulated licensed as a financial institution, we're just licensed as an angel syndicate, we can only raise from a qualified investors. So you still need to be a high net worth individual qualified person, and then I can come and take from you just $1,000, but you need to be qualified. Whereas in the case of Stride, because they have that license from the FSA, they can truly raise from retail, from an actual retail investor who is not a qualified investor. The same retail investor who would otherwise either be in fractional real estate or will be investing in the public market. So our ability now is to tap into a much, much wider base.
Okay.
Second is the technology angle. So obviously previously we were doing this kind of just manually. Now effectively the ability for us to have startups apply from all over the world, create automated campaigns, create matching between the investors and that. So obviously that tech stack gives us ability to scale much more. And third is we don't see startups and venture as a standalone isolated. We see it as part of building, again, a capital markets. The public capital markets, they're being built in the UAE, massive strides are being made by the Dubai Financial Market, the Abu Dhabi Exchange, the authorities. We want to create the same movement on the private market side. So the idea for Stride is to evolve into a full, effectively, if you want, a private capital markets ecosystem. So they already have sports. We now have venture. We're going to be launching secondaries. We're going to be launching consumer-led brands. So we'll have multiple verticals that ultimately creates an overall private capital markets ecosystem.
I love that point because I think like the best performing asset class, if you look at the last 10 years in the region, is one thing, which is real estate. And even if you look at the boards on Forbes of the high net worth individuals in the region, the majority of their net worth is in real estate. And I think private markets is such an interesting category to tap into because you're no longer like, a business is an asset by itself, but it has working capital. There's money coming in, money coming out, money being spent to create more value so that more money comes in. With real estate, it's more about the appreciation coming from supply and demand. So it's completely different. And there's always this idea that I have with my friends, which is you can take any business, and private markets will give them that line of credit, which does not necessarily need to be a loan. It could be an investment. And all of a sudden, you're going to be creating so much value in the economy. And the truth is, like here, and I agree with you, there are many people that can't afford that very high ticket mark, but a lot of people can put in a small bit of capital that would have a significant impact in another place. So I generally love this model. I think it's going to be great.
I fully agree with you. It can be anything. It can be equity, can be debt, can be content financing, can be revenue-based financing. Yesterday, I met someone in N5 in Dubai. What he's doing is he's basically buying vendor machines, and then he's basically creating pools of capital in the vendor machine. So effectively, we pool together, and collectively, we have a vendor machine, ineffective vending machine in this building. So it's a completely alternative form of capital. It's not equity, it's not debt, it's not content. It's a new revenue share of effectively collectively owning a vending machine. That proliferation of capital is what we need. That democratization, that ability for us to, whatever good idea is, you support it with capital in whatever structure you want. That free flow, that true private sector, true kind of incentives, true animal spirit almost, is what really drives the markets and success.
But how do we shift consumer behavior? Because if you, like the majority of people I speak to that are saving up to buy real estate. None of them are thinking of, I'm saving up to invest in anything other than real estate. So from a consumer perspective, how are you thinking of shifting the way they think?
One is definitely awareness. So, for example, one of the boards I sit on is Thunder, which is effectively a Robin Hood equivalent in the region, and with even more features. And they've spent a massive amount of time on content. So they have what they call Thunder Claps, which is a lot of media. They have their podcast. They have Rumble, which is a research arm and content arm of Thunder. And with that, they managed to reach a place where more than 90% of their investors are first-time investors in the market. More than half of their investors in Egypt come from outside the capital, from outside Cairo. Nice. So it is an awareness game. Because as you said, why are we all investing in real estate, the majority? Because that's what we've always been taught to do. That's what we believe. That's what we saw our parents doing. And we're doing the same. But if we can see...
And that's what's being marketed as well.
Exactly. But like if you look in the US, even in Saudi, they have a much more extensive public investing culture because they grow up from school sometime being given. So this idea of creating simulators in universities, in schools, parents giving their kids a small budget, etc. It's really, if you grow up and grind with it, that idea of systematically investing a small part of your salary, not trying to time the market, just going in, all of these, if we make it second nature to us, that's when it really kicks in.
And that's when you create a full comprehensive ecosystem, both public market and private market. Yeah, I see. So, I know you're going to have a very unique perspective on the next question, given that you've worked in advisory, you've worked as a CFO, worked as an operator in a startup. Where do you think are the biggest opportunities in the next 5 years in the region?
Yes, I don't want to sound cliche, but I think at this point, it's only natural that everyone is doing a job, is now thinking, how do I use vibe coding, use anything to build an AI agent that does what I do? And this is, in my mind, is a very democratized opportunity because today it doesn't need to be an AI startup. It can be just a tool that you do on the side. It can be a side hustle. It can be a side gig. It can be a startup if it's big enough. But the idea is today, you know that you're an expert at something. You know that now you no longer need to know how to code with Lovable, with anything, you can do it. Why don't you just try to build a custom GPT, build an AI agent, build a tool, call it an automation tool. Let's not even make it fancy AI that does what you do.
Yeah.
In my mind, that's a massive opportunity. The second one I see is content. Today, content has proliferated in an incredible way, and content creators have become really at the heart of the new economy, right? It's no longer just about an influencer or a key opinion leader, etc. You're now really at the heart of the economy itself, right? So content creators turning into businesses, turning into Mr. Beasts, turning into launching their own products, monetizing their content. I think that is really, because everything is becoming social, right? It was social media, now it's social finance, social shopping, live shopping, social commerce. So with that shift to social, I think content will be really at the heart of everything. And then a third, I think, again, not to sound cliche again, but I think fintech is evolving from, okay, it's just the kind of the classic, okay, I'm just going to do a digital bank, to now there's so much opportunities with this rising financial awareness to create so many products to allow for financial inclusion, for financial awareness, for people to be part of the network. So whether you're creating an investing product, a saving, an offshore account, a buy now, pay later that's evolved into a rent now or a B2B, etc. But this kind of proliferation of products available for people to create that wealth and that awareness and allow people to go beyond just putting their money in the bank will continue to be huge.
Yeah, I pretty much agree with every single thing you said. And I think another point to add as well, it's not something that many people think about, but I think over the last, let's say, 50, 60 years, you could say that most things that were very private have become increasingly more democratized. And I think that there will also be a trend of everything being democratized, which loops in very well with the idea of giving people access to something that was previously inaccessible, like investing in YC-backed startup.
I fully agree. I think you have one of the comments from the CEO of Apollo, which is the biggest kind of alternative investment firms in the world, saying the line between public and private is already very blurred. What do you call today public-private? You mentioned crowdfunding. Is crowdfunding public or private? The company is private, but you're effectively opening it for the general public to invest. So what does that mean? When you have effectively today Lendo offering you to come in and kind of lend a company. The company is still private, but it's lending from the money. So that they're peer-to-peer. So that line of public-private is being very blurred. Everything is being blurred. Historically, the difference was private is over-the-counter, very specific, only for large institutions. It's big chunks of money. It's not accessible. And then public is on a regulated exchange. It has a ticker. It has a public name. Today, you have so many things in the middle. So the situation has become much more evolved. We're living our life in general in a much more public way in every way we do. Everything is more open, more accessible. So fully agree with you. That's a very natural progression.
Okay, so to wrap it up, it would be an advice. And I think coming from you, it will mean a lot to many people, which is if you are somebody who is good at heart, but doesn't have much resources or much value to create for others, how would you approach building relationships from the beginning?
Look, I believe everyone really has a value to add, right? Because at the end of the day, the value is not a question of, one, it's not binary. It's not, well, I reach that, or there's no point at which you reach and you say, now I add value. It's very, very small increments. Second is, no matter what stage you are, even if you're in a very early stage, you can actually add much more value to people who are potentially around your stage, who see themselves more in you, right? Because today, someone, for example, above a certain age, someone young, they just may not be able to see themselves in that person, no matter how successful, no matter how they try to be contributing.
Yeah.
But everyone, someone else sees themselves in you. You're always closer to someone than someone else. So your ability to go out and share and provide that story. Also, someone may feel, okay, like I haven't succeeded, but people may find much more in the failures and the inabilities to do them, because if you've succeeded, a lot of times you've had certain resources, privilege, access that other people may not have. But if you have struggled and failed, maybe because you didn't have these resources, and people who also don't have the resources are finding themselves more in that and trying to see, okay, with the same resource base, how can I just avoid some of the mistakes? So for me, everyone can add value, and everyone can start doing something, whether it's content, whether it's engagement, whether it's being there, whether it's volunteering. So don't not use that as a burden at all or a barrier.
I love that. All right, and I think with that we wrap up the episode. Unless you have anything that you want to ask me.
No, I wanna thank you. I think it's been incredible, and the episode's been incredible. Maybe one question to ask you: How has the podcast become so successful? What's the secret sauce?
Honestly, I think what the secret sauce is that I'm young. That is the question that I typically get, or the answer that I typically get when I ask people, like, why did you choose to come on the podcast? They would typically tell me, if you were somebody who's a bit older, we wouldn't really, like, not necessarily care, but the idea of they get a lot of requests, right? But when they see somebody who's going out there really trying to create something for themselves, but also trying to give them value on the other hand, they respect that a lot, and that's why they come on the podcast. And I think that has just been my little advantage.
So it's the drive, energy, and hunger on one side, with the value add and the execution on the other side. That's incredible.
Lovely. All right. Thank you so much, Youssef.
Thank you.
It was a pleasure.
Thank you.